Hi guys, welcome back to the channel. I'm Dilip and today we are diving into something that could improve your trading decisions, a fresh perspective on FII and DII data. If you have been in trading for a while but haven't incorporated this institutional money flow into your analysis, you might be missing a crucial piece of the puzzle. Foreign institutional investors and domestic institutional investors are the big players in the market, the dinosaurs whose money create waves that affect all of us. Today I will show you exactly how to track their actions, interpret their moves, and most importantly, how to use the information to gain an edge in your trading. By the end of this video, you will understand exactly what FII and DII data tells you, where to find this data for free, and 5 specific ways to use this data in your trading, and the common mistakes most of the retail traders do and how to avoid them, a practical system to incorporate this information into your daily analysis. A quick reminder before we start: subscribe and tap the notification bell to stay updated. So let's get started, guys. First of all, let's clarify what we are talking about here, guys, when we speak about FIIs and DIIs. FIIs are the foreign entities like global pension funds, hedge funds, and asset management companies that invest in Indian markets. Whereas DIIs are the domestic players like mutual funds, insurance companies, banks, etc. They control massive amount of capital. In fact, FIIs and DIIs combined often account for over 70% of daily trading volumes in many securities. So let me show you this example, the correlation between FII and DII's inflows in markets and how the price moves as they increase their stakes in the companies. So I have taken here CMS Info Systems Limited monthly chart. So it's a clear up move was there here all the way up to September, October month. The high is around 600 level. And let me also show you the shareholding pattern of this from March 2022. So this was the FII data at March 2022, which is at 9.54%, and then it gradually started increasing. And look at how much is there at December 2024. Not only the FII data, look at the DII data too. So it was 11% in March 2022, and by December 2024 it reached up to 27.03. So if you look at how much the prices have increased, so it's a clear indication that these FIIs people are increasing their stakes. Because of this share price has increased from 230 levels to 600 levels. Now it's very important to understand this critical data comes in multiple time frames. Daily data you can check directly from the NSE website. Even the weekly data you can check in some websites like Trendline. The monthly data you can check. They have compiled the cash market, the debt market, and the derivative market. So everything is compiled in. There are plenty of websites which offer this segmentation. So each and every time frame tells you something different. Daily data might show you short-term trading opportunities, while monthly and quarterly trends can signal deeper shifts in the market sentiment of these FIIs into the companies, specific companies. So where do we find this reliable data? So first thing is you can go directly onto the NSE website itself. Here daily data will be provided, and you can go on to this screener.in, where all the fundamental data is compiled here, including quarterly results, P&L statements, FII data, DII data, everything. And not only this, guys, try to follow these RBI bulletins. They publish the overall economic outlook. So based on the outlook itself, there could be changes in FII inflows, outflows. One more best thing is most of the brokers they provide FII and DII data. So next we are going into 5 specific strategies to leverage this institutional data in your trading. First thing is trend confirmation. Let's take one example here. I'm taking Tata Motors. This is a monthly chart. So if you look at somewhere in the month of July and August. There was a peak. The ATH itself has been made around this, and from the next month itself it has broken the previous month low and it started coming down. So the next month is September. So let's look at the FII and DII data. In the year of 2022, there is some increase in FII and DIIs. In September 2024, we have seen a good FII inflows, and the overall stake is at 20.54%, and in December it has reduced to 18.6. From March 2022 to September 24, there is a significant 6% increase in FII shareholding pattern in this Tata Motors. Same like in from DIS from 14 to 16. It is also very good. It's not very high, but it's also is good. But then again, if you look at, there is a decrease in FII inflows. So there is a increase in outflow in the September to December quarter. As we have seen here, in the August month, it has made a high, and in the September month onwards, there was a total turnaround. So if you have identified that there is a significant reduction in FII holding pattern, you might have exited. This is one strategy, guys. So it confirms the trend. Second strategy is that, guys, divergence among FIIs and DIIs. So here I have taken Nifty cash markets, FII and DII data. From the month of October 2024, there was a significant selling from FIIs. FIIs have net sold 1,14 crore. At the same time, if you look at DIIs, they are totally bullish. Not even a single month they have been selling. So they kept on buying it. Because the market itself is at the peak, we have seen some kind of dip. But this divergence indicates there is a strong bullish sentiment among DIIs. So at some point of time, if there is going to be a correction, it's a very good idea to accumulate. These FIIs, they might be selling only in sectorial specific stocks, and they will be accumulating in some other stocks where there might be a good growth potential. This is one thing, guys. If you see a significant correction and FIIs are selling, DIIs are accumulating, look for at liquidity areas, try to accumulate in tranches. And the third strategy you can look for, so sector rotation, guys. So these institutional investors don't just buy and sell the market as a whole. They try to rotate between sectors. By tracking sector specific institutional flows, you can identify which sectors are gaining favor. So let me show you how to analyze this. For this to understand, you need to first know that which mutual funds performing well. Once you know that, it will be easier for you to analyze that. So first of all, go to moneycontrol.com and go into mutual fund section and find the top funds which are performing well. So in 2025, we have good correction. We will not be seeing too much of returns. So look for where there is a minimal impact. So if you focus here, this HDFC Focus 30 Fund Direct Plan Growth, go for this. While the markets have corrected 15%, this fund has only showing returns of minus 2.18 compared to the other things. Go to morningstar.in. So here what you do, you search for this fund. So once you search for this fund, you will see the same performance, whatever that we have seen. Till YTD, it's a negative 2.18. So the same has been seen here. So both are matching. So what you do here, go into what is the portfolio for this fund. So they have a good amount of 9% in HDFC Bank, ICICI Bank 9%, Axis Bank 8.7%. So in these top banks, they have good investments, and they have some investments in pharma sector. And go to the next page, you will also get some investments in the auto sector, mainly in Bajaj Auto and HM Motors. And look at the performance of these stocks also, guys. HDFC is performing well. Even ICICI Bank YTD return is good, and all of the banks also, they are performing relatively well compared to the other funds. Like this, take top 3 to 5 funds where the big returns are there and try to search that mutual fund in the morningstar.in and look for in which sectors they have most of the allocation, and even in that note down the weightage and try to maintain a running Excel sheet. In that running Excel sheet, every month or quarterly wise update whether they are increasing their stake in that companies or in the sectors, or they are decreasing. So this is the best idea I can suggest you guys. And the next strategy we are going to discuss is that volume confirmation strategy. For this, you need to identify which stock there is a spotting volume. So for this, to understand this, directly go into NSE India and look for bulk and block deals. This is the main thing where you can watch for. So watch for whether any kind of international funds or domestic funds are buying into the stocks, and if that stock has seen a significant move, if at all the overall chart itself confirms along with the big volumes, so like it happened here, and if it is a breakout or something like that with a good volume, you can go for a trade in that with a good position size. Don't try to allocate everything in that stock. So the last strategy which we are going to look at is the anticipating the policy impacts. So let's say, for example, institutional flows itself often shift before major policy announcements or economic data releases. So by monitoring unusual patterns in these flows, let's say before a monetary event, if there is a huge correction, there is a possibility of, if market is at around liquidity zones, there is a possibility you will see a turnaround from that liquidity zone, or after announcement, if at all there is going to be an interest rate increase, there is a high possibility they will bring their money into the Indian markets, and again mainly into Indian debt markets. But into stock market it may decrease because companies itself, they might face higher borrowing costs, and this affects the earnings. And again, watch for how the rupees is appreciating compared to the other global currencies. In any system you're following, there will be obviously some common mistakes generally retail traders do. So the first mistake is overreacting to single day movement. Whenever you see a strong green candle or red candle, there is a high possibility that you assume that institutionals are entering. And so always look for a pattern over at least 3 to 5 days or 2 to 3 weeks. The second mistake most of the retail traders do is they ignore the overall context. Let's take this Tata Motors itself. If you compare from COVID, it was somewhere near to 70. It has trended up to 1160 levels. Do you want to enter here? So let's say if you have entered here, that is a different thing. Going with 1 or 2 lakhs at this highs, it is going to be a very risky one. So always understand the context where you are trying to enter in the market. Third mistake is not distinguishing between cash and future data. Future data is always a zero sum game, and cash is always what moves the price on a long term. So these institutional traders, they trade in derivatives as a hedging instruments. It could be futures, it could be options. They don't just bet directional in futures or options like a retail trader do. So make sure you understand the difference between the cash market and derivative positions. Fourth mistake most of the retail traders is focusing only on the net figures. So sometimes the overall net figure can be misleading. For example, FIIs might be net neutral overall, but heavily buying in one sector while selling in another. So always check sector specific data. The fifth mistake most of the traders do is that trading against strong institutional trends. Here, even when they see at institutional data, they hook to that previous experience and they try to go contrarian against the institutional data. So here is an practical system to incorporate this information, guys. Set up a simple tracking system. Spend at least 15 minutes to 1 hour daily reviewing these institutional flows. Look for specific patterns as we discussed and write them down. Start small by using this as a confirmation tool for your existing strategies. So don't totally depend on these strategies itself. Finally, if this helped you even a bit, the next video will change how you look at the market. Don't miss it, guys. Thanks for watching, and remember, in trading, following the smart money is not just smart, it's very essential. See you in the next video. Bye bye.